All right. Hi, everyone. Hi, everyone. Welcome to today's live trading session brought to you by IronFX. I trust you've all had a great week so far. Right. So before we start, let's quickly go through the risk warning and disclaimer as well. Right. Take note that the products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. And also take note that the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so before we dive into the charts and trading view, we'll take a look at what's left of the economic calendar for this week. Got a few things going on Thursday and Friday. Right, we just had the flash composite PMI data for the EU and the UK been released just a couple of hours ago, so we'll look through that. But upcoming, we've got unemployment claims later today at 12:30 p.m. GMT, followed by the flash composite PMI that's at for the US, that's at 1:45 p.m. GMT, and we've got retail sales out of Canada tomorrow as well, along with a bunch of other stuff. All right, so this is the calendar for Thursday and Friday, right? So you can see here we've had uh, the composite flash composite PMI that was released. Remember, the composite PMI consists of the manufacturing and the services sector. So over here, it's listed as individual. So we can see for the EU, manufacturing services sector is once again leading overall PMI activity as a reading above 50 indicates expansion, while the reading below 50 indicates contraction. So we can see that the manufacturing sector in the EU continues to contract in August as well, while overall activity is being pulled up by the services sector with a strong reading of 53.3, which was higher than the forecast of 51.7 and higher than July's reading of 51.9. Similarly, for the UK as well, uh, we've seen a strong set of PMI data as well for both services and manufacturing. Manufacturing has returned to expansion in the UK. We can see July's reading coming in at 52.1, and August, the flash reading for August, edging a little bit higher to 52.5. Similarly, for the services sector, it grew 52.5 in July, and it continues to climb higher, hitting 53.3 for the flash reading in August. So overall, a much stronger PMI report out of the UK as compared to the EU. Right. We've also got unemployment claims coming up later today at 12:30 p.m. GMT. And the composite PMI, the flash composite PMI for the US, will be released at 1:45 p.m. Later today. And we have retail sales out of Canada tomorrow at 12:30 p.m., as well as Chairman Jerome Powell speaking at the Jackson Hole Symposium as well. Right, looking at unemployment claims, right, basically this is a data point that's released every week, right? So the weekly data point that gives us some insight into the strength of the US labor market. So unemployment claims are basically Americans filing for unemployment benefits, of course. So that means when we see a figure that's rising like this strongly in the second and third quarter of 2023, it indicates some softness in the labor market, similar to what we saw since mid of May as well. We've seen unemployment claims, which are averaging around 210,000 here, start to pick up quite steadily, which indicates some softness in the US labor market. So when you have claims starting to trend higher and move to elevated levels, like what we saw in the middle of 2023, right, hitting about 250,000 and above, or coming close to 250,000 in recent weeks, it does indicate some softness in the US labor market. So when this claims tend to trend higher, right, and continues to do so on a weekly basis, it usually puts some downward pressure on uh, the US dollar. So in terms of a near-term catalyst, right, rising claims usually have a bearish impact or function as a bearish catalyst for the US dollar. Conversely, as what we saw in the second half of 2023, claims sort of plateaued around 250,000 and then started to trend lower. So as claims trend lower, this indicates strength or resilience of the labor market because we have less people filing for unemployment benefits. So when you have less people filing for unemployment benefits, it signals a resilient labor market, which in turn usually functions as a near-term bullish catalyst for the US dollar. Now, Last week's reading came in at 227,000. This week we have a forecast of about 232,000, just slightly around here. And when you look at the 4-week average, the current 4-week average for claims currently stands at 236,000. So we are seeing last week's data come in lower than the 4-week average, and at the same time, we're also seeing this week's forecast coming in slightly lower than the 4-week average. So it does seem like we may get us another softer reading for claims. That means a slightly lower reading for claims. So if you do get that, right, that's going to quite likely going to function as a bullish catalyst, right? So remember, when claims come in less than the forecast, and at the same time as claims continue to trend lower, this signals a resilient labor market, which in turn usually functions as a near-term bullish catalyst for the dollar. So that means we can expect currency pairs like the euro, pound, Aussie, Kiwi, along with gold prices to fall. Remember, rising dollar would have the negative opposite direction impact on these other assets. Conversely, if we do get a spike in claims and it comes in higher than the forecast, this week's forecast of 232,000, this is quite likely going to function as a bearish catalyst for the US dollar. Remember, higher claims means some softness in the labor market, which in turn then is going to function as a potential tailwind for currency pairs such as the euro, pound, Aussie, Kiwi, and also, of course, for gold as well. Right, so this is how we can easily interpret the unemployment claims data released later today, and it does function as a pretty decent near-term catalyst as well. Right, and we've also got the flash composite PMI for the US out later today at 1:45 p.m. So we can see here, this is the chart for composites. Remember, the composite PMI incorporates both the manufacturing and services PMI. But when you look at it and when you break it down and look at it individually, we can see the manufacturing sector in the US, as measured by the S&P Global PMI reports, has been in contraction as well. So it's been in contraction last month, and the flash estimate for August points to another month of contraction as well. On the flip side, services looks to be expanding relatively strongly once again. July's reading came in at 55, and the flash estimate for August is coming in at 54. And when you combine them together, incorporate them together, we can see that the composite PMI forecast is at 53.5, just slightly below July's reading of 54.3. So basically, we're expecting, once again, services sector to pull up overall PMI activity in the US. And this is quite likely going to have a pretty decent impact on the value of the dollar as well. So if we do get a much stronger set of PMI results, right, this could function as a near-term bullish catalyst for the dollar. Conversely, if we see a PMI miss, right, that means we could potentially see the dollar come even under further pressure as what we're currently seeing. All right, now with that, let's move on over to the charts and trading view and start the analysis on the dollar index. Right, so here I am on the daily time frame here, the dollar index, and we can see that after hitting a high of about 106.10 at the end of June, it's reversed and dropped significantly lower, right? It's dropped briefly, even dropped as under 101 yesterday as well. So on Wednesday, 21st of August, the dollar index even dipped under 101 briefly, but it seems to have stabilized at around this region for today, right? We can see very clearly a series of lower highs and lower lows. So it's very clear this is a very strong bearish downtrend, which is also being highlighted by the bearish Ichimoku cloud. We can see that the dollar index continues to trade underneath the bearish Ichimoku cloud as well, right? So we can also identify a very nice descending trend line as well. We've seen price action test this descending trend line several times, and in terms of support, right, price is approaching its swing low support that occurred at the end of December last year, right? This level at 100.85. So quite clearly, the first major support for the dollar index is at 100.83, a swing low support that took place at the end of December last year. Now, looking for the next major support level is another swing low that occurred in mid-July of 2023, and this is at 99.74. Right, so price does look to have stabilized at around this level here. Now, as price is falling down, right, we can also do a Fibonacci projection here, right? So we can start a projection starting from here, 0.1 on 30th of July, going down to 0.2, which is the 5th of August. and of course ending at point 3, which is the 8th of August, right? 1, 2, 3. Let's pull up all the fibs. Let's see what we get. We can see, right, very clearly, very nicely, that this Fibonacci projection has helped us identify where the 100% level is, and it aligns pretty well with the swing low that occurred at the end of December. So this tells us this is going to be a pretty significant support zone for the dollar index, and it's going to take something really uh, major to cause it to break through this level here. Remember, we have a very significant swing low at 100.83, which occurred at the end of December. And at the same time, we are seeing a 100% Fibonacci projection level as well. So let's get rid of all the other fibs and just keep 100%. Right, okay. Now that we have that, what about resistances? Now that we've identified the major support levels for the dollar index, what about um, the resistance? Okay, so in terms of resistance, I see a pretty decent uh, level here at 102.15. So previously, this level functioned as a pullback support in early January. It functioned as support again on Monday, 5th of August, before finally giving way on 19th. So what was previously a pullback support level can now potentially be a resistance. So that's how we've identified the first resistance at 102.15, which is a pullback resistance. And of course, the next resistance for the dollar index is this pullback here. There's another pullback that occurred here on the 8th of August to the 13th, price hitting about 103.23, right? And if I were to stretch it across, you can actually see it's a very nice overlap level as well, right? Back on 21st of March, this level at 103.24 functioned as a nice pullback support, and which led the dollar index to bounce higher. And after that, it functioned as a resistance on the 9th, 8th, and 9th of August as well. So this is a nice overlap level at 103.24, which we can identify as a second resistance. Right. Now that we've identified the various resistance and support levels, remember we've got unemployment claims coming up today, and we've also got the flash composite PMI results for the US. If we get a set of data that shows which shows a weakness for the dollar, so that means if we see higher than expected claims and a weak PMI flash date result, that's quite likely going to function as a bearish catalyst for the dollar. So take note, the combination of higher claims and a weaker than expected PMI result would quite likely function as a bearish catalyst for the dollar, and we can probably expect to see this recent retracement to the upside reverse and drop lower. So if we do see a reversal take place, a bearish reversal take place, we will then be using this first support, the vicinity of the first support, which is at around 100.83, as a potential take profit zone for any short dollar index trades that you may have. So take note, combination of higher claims and weaker than expected PMI numbers would likely cause a bearish reversal for the dollar index. And of course, that would mean we are likely to see it reverse and head towards the first support, which we can use as a potential take profit zone. Now, on the flip side, what if you do get a data set of results that indicate is going to be bullish for the dollar? So that means we will need claims to come in lower than the forecast while we see a strong set of PMI results. So that means, of course, we are likely to see the dollar index rise higher, right? So where can we then possibly identify potential target zones? So for that, we can, one way to do that, we're going to do run a Fibonacci retracement, starting from this high here on the 8th of August, going down to this low here on the 21st. Let's pull up all the fibs. Right, so we can see there's several levels here, and we also see it aligned pretty well with the bottom of the wicks here, the 38.2% over here, and 23. So as an intermediate take profit zone, right? So should we see, right? Okay, so if we do see uh a set of data, right? A set of data later today that's going to trigger, or rather, that would function as a potential bullish catalyst for the dollar. That means we can expect dollar index to continue retracing higher. And then we can identify this zone here that's in between the 23 and 38.2% Fibonacci retracement as a potential take profit zone for any long dollar index trade. So we're looking at around 101.55 to 101.90, right? So roughly within this zone here is a good area to identify as a potential take profit zone for any long dollar index trades. Conversely, we'll be looking at the first support which is the swing low that occurred at the end of December, as a potential take profit zone should we see the dollar index reverse and drop lower due to fundamental catalysts, bearish fundamental catalysts such as the unemployment claims and the PMI data. Right, so these are the key levels for the dollar index. Let's bring up the RSI and stochastic as well. Right, what we do see, well, by these two indicators, remember these two are momentum indicators, and what we're currently seeing is an oversold signal as well. What do I mean by that? We can see that the RS stochastic oscillator has dropped under 20, hitting as low as 5, while the RSI has dropped under 30 as well, hitting about 25. So the last time we saw these two indicators drop as low as this, right? It showed us a potential oversold condition. So that means we are expecting to see dollar index stabilize at its current levels and retrace higher, right? So I'll give you an example as well. Here on 6th of August, let's zoom in a little bit, right? On 6th, I would say on 5th and 6th of August, right? We saw on 5th of August, we saw RSI hit 29. On 6th of August, we saw stochastic drop under 15. And actually on the 5th of August as well, that's where we saw the dollar index actually stabilize, and or rather it found the floor. It found the floor at 102.20 before reversing and staging a nice retracement to the upside for the next 3 to 4 days. Right, so there's a most recent one on 6th of August where we saw an oversold condition. Right, another time that we saw another nice oversold condition was here on the 17th of July, with stochastic dropping as low as 5 again and RSI hitting 31. Once again, we saw the dollar index stabilize at around 103.70 and resume and begin a nice retracement to the upside for about another week or so. Right, and another one here, just one final example is here as well. Okay, here we only had one signal from the stochastic oscillator dropping as low as 5 again, but RSI only dropped as low as 42. But you can still see here the dollar index stabilizing at around 104 for a period of 5 days before finally moving higher. So once again, we are seeing a very similar setup, uh, meaning that we are seeing a oversold condition, right? We have a signal for an oversold condition here based on the stochastic oscillator and the RSI. So take note, we may see a nice bounce for the dollar index. So if we do see the dollar index bounce higher, driven by a fundamental catalyst of the unemployment claims and PMI results, that means we can then use this zone here that's identified between the 23 and 38.2% Fibonacci retracement as a potential take profit zone here. So your first take profit zone can be identified between 101.55 and 101.92. Right, okay, so these are the key levels for the dollar index. Then we'll move on down to gold. Take a look at gold, and then we'll come back to the major currency pairs as well. And of course, we'll take a look at the indices. We'll take a look at Germany 40, US 500 as well. All right, so let's move on over to gold first. We can see here, right, weaker dollar usually functions as a strong tailwind for gold prices, and this is something that we've seen over the last few weeks. And of course, with on Tuesday as well, gold making a new intraday high at 2,531. So XAU USD is the instrument that tracks spot gold futures. And we can see that the intraday high was made on Tuesday, 20th of August, hitting as high as $2,531 per ounce, right? So very clearly, this is the all-time high, and the first resistance is at around 2,513. Right, so it's quite very easy to identify the first resistance for gold. It's very clear, close to the all-time high. Now, since this is the all-time high, how could we possibly try and identify the next resistance area? Remember, we have nothing that we can reference in the past. There's no overlap, pullback, or swing high resistance that we can reference from the past. So in such a scenario, right, we'd have to rely on Fibonacci tools. So in this case, we can use like a combination of Fibonacci extensions and Fibonacci projections as well. Right, so let's start with an extension level. So to find this extension level, we're going to run a retracement starting from this high on the 17th of July, going down to the low here on the 25th. The key extension levels sit at 127 and 161%. So you can see very clearly now, gold prices have stalled at around the 137% extension level, right? Although the intraday high did climb above, the 127% extension, but you can see this is where it roughly stalled. It did help us indicate a major resistance area. So that means this extension at 161% is going to be the next resistance for gold prices here, right? So should we see gold break higher, right? If it breaks above its current intraday high, it's quite likely going to make a run towards the Fibonacci extension at 161%. So that's at $2,564.31 per ounce. Right, so this is how we've identified the second resistance. Could we possibly do a projection? Let's see if we can do a projection. Okay, so for the projection as well, right? To find a projection involves 3 points. We're going to use this tool here. Start the projection from this first point here on 26th of June, going up to second point, which is on 17th of July, ending at point 3, which is on 25th July. Okay, let's pull up all the projection levels first. Right, we can see very clearly 61 and 78.6% have already been surpassed, so we don't need them. And we can see that 100% of Fibonacci extension, our projection level sits at 2,543. So we actually have a nice zone here as well, right? So should we see price break above the first resistance for gold, right? The next major resistance is going to come in at this zone here that's identified by the 100% Fibonacci projection and the 161% Fibonacci extension. Remember, we have no other level to reference. There's no swing high, pullback, or overlap resistance that we can reference from the past. So in such a scenario, we're going to rely on Fibonacci tool. So this is how we've identified the second resistance zone for gold prices here. Now remember, with regards to the dollar index as well, right? If we do see the dollar index break higher later today, then of course we can expect gold to pull back a little bit as well, right? We can expect gold to pull back as well. Now I see a nice, I would like to highlight this as a intermediate support level here, right? It's not the cleanest support level, hence I would like to identify as an intermediate support level at 2,474. We can see here this level here previously functioned as a swing high resistance on 17th of July, another swing high resistance on the 2nd of August, and a pullback resistance on the 13th as well. So we can see three major instances where gold prices had stalled previously, and now, of course, with it breaking higher or breaking above it, this pullback resistance level in the past could now potentially function as a support. So we've identified this level here as a potential intermediate support, and I see another nice pullback level here at 2,477 to 2,447 as the first major support, right? You can see here on 14th and 15th of August, gold prices stabilizing around this level before making another bounce higher. And if I were to stretch it all the way across here till 31st of July, we can actually see that this is a very nice overlap support level here. Right, so this is how we've identified the first resistance, intermediate support, as well as the first support. So that means if we do see a stronger dollar later today, we can expect gold prices to fall, and then we can use this pullback intermediate support level at 2,474 as a potential take profit zone for any short gold trades that you may have, right? That can be your first take profit zone for the short trade. And if, of course, prices continue to drop even lower, we can then use the first support here at 2,447 as the second take profit level for any short gold trades that you may have. Right. For this leg here, for this uptrend here from 8th of August till the 20th, we can also run a Fibonacci retracement. And we can see if any of the retracement levels align well with the intermediate and first support. Right, so we can see here 38% aligns pretty well with the intermediate support, while we have the 61% just underneath the first support. So let's keep 30 and 61. And we can see we have the presence of these retracement levels, which would add further significance to the strength of these supports. So intermediate support at 2,474 has a 38.2% Fibonacci retracement, while the first support at 2,447 has a 61.8% Fibonacci retracement just underneath it. So once again, should we see uh, the date today's data later today? Remember claims and PMI, if they composite PMI for the US, if they uh, if we see a set of results that's going to be bullish for the dollar, then we can expect gold prices to pull back. So if we do see gold prices pulling back, we can then identify the first take profit level and the intermediate support at 2,474. And of course, should prices continue to fall even lower, we can then identify the next take profit level and the first support, which is at 2,447. All right, now let's move on over to uh, the euro. We'll take a look at the euro, and then we'll after that go back to the indices as well. All right, looking at the euro here, we can see uh, since the end of June, right? It dropped as low as 1.0670. It stabilized around this region here for a few days before bouncing higher. Made another leg down here in second half of July before making a very sharp bullish uptrend here, bullish rise here from the beginning of August, right? So when you zoom out a little bit, it has also broken out of this December high, right? Back in the end of last year, the euro made a high of 1.1139, and it has broken through this level yesterday, right? This was previously functioning as a major resistance area, right? Take note, this was this swing high resistance that occurred on the 28th of December last year, was previously functioning as a very strong resistance barrier, which has now been broken quite cleanly. So what was previously a resistance barrier, right? The swing high resistance can now function as support, and which is where we saw yesterday as well, 21st of August, right? We see the bottom of this wick here, basically touching 1.1105 before reversing to move higher, right? So this is how we've identified the first support for the euro, and the second major support that I see actually is at this level here. We sort of like have a nice overlap level, support level here at 1.0972. Right, we can see here previously in mid-Jan, this level here functioned as a pullback resistance, and then a swing high resistance on 8th of March, and another swing high resistance on the 5th of March. And then after which it proceeded to function as a pretty decent support level in mid-August. So this creates a nice overlap level at 1.0972, which we can use to identify as the second support. Now, what about resistances? Now, for that, we're going to have to zoom out a little bit, and we can see another swing high resistance at that occurred in mid-July of last year, 17th of July, 2023. Right, so this we're going to use this swing high resistance to help us identify the first major resistance now for the euro. Which is fine. I don't think we need to identify a second resistance just yet because it's really quite a distance away. But if you were just to check if there's any other level that we can reference, or yes, we can. We'd have to go back all the way to this pullback resistance level here that occurred in February of 2022. But for now, since the euro is still trading quite a distance away from the first resistance, there's no real need or urgency to identify the second resistance right now. All right, okay, so let's see. So that means if we do see, remember this all relates back to tonight's data as well. If we do see the dollar rising even further today, that means we are quite likely to see the euro pull back at least towards the first support. And so take note, if we do see dollar rising strongly later today, and if we go short on the euro, we can then use the first support, which is at 1.1105, as a potential take profit zone. So we're going to be using the first support as a potential take profit zone for any short euro trades that we may have later today. Right, and let's see if there's anything else I can try and identify as well. Probably can run a Fibonacci retracement. Let me see from here, this low on the 1st of August going up to the high of 21st. Let's pull up all the fibs. Right, we can see the 50% Fibonacci retracement aligns very well with the second support, and we don't really see anything else lined up, so that's fine. So we'll just keep 50% in our analysis. Right, okay, so these are the key levels for the euro today as well. Okay, looking at stochastic and RSI, both of which are suggesting an overbought condition, right? So overbought condition means we expect the price for this asset to stall and potentially reverse to drop lower. So when we see an overbought condition like this, we should be expecting a potential bearish reversal, right? Which is something similar to what we saw here on the 17th of July. On 17th of July, we saw stochastic oscillator hit 95. We saw the RSI hit 69 as well. And of course, we did see the euro top out at 1.09 40, right around 1.0940, and it reversed quite sharply to drop all the way down to 1.0790. Right, so it's a similar technical setup that we're seeing now that's being highlighted by the momentum indicators. We're seeing a potential overbought condition here, which could mean we may a further pullback for the euro. Right. Not only did this happen on 17th of July, we also saw this occur on 16th of May, right? 16th of May, stochastic hitting 95, RSI coming about 66. We did see the euro top out at around 1.0880 and pull back to drop as low as 1.07990. And also just one more example here on 7th of March. 7th of March, we saw RSI hit 67, stochastic hit 91, and we saw the euro climb a little bit higher the next day before it reversed at 1.0978 and dropping as low as 1.0744 before making another leg lower down all the way to 1.0605. So we can see here, these are good examples to show that on the daily time frame, when we see the stochastic and RSI indicators highlight a potential overbought condition, usually it's quite likely we can see a pretty decent pullback. So that's what we're seeing now as well. Remember, for the euro, we have a potential overbought condition highlighted by stochastic and RSI, whereas for the dollar index, we are seeing an oversold condition as well, right? So this is all tallying up together, right? It's all tallying up together, complementing each other. So it's quite likely we could see the dollar push higher later today. And of course, that would mean the euro is going to pull back quite sharply as well, right? So take note of that. And also remember, be aware of how the data itself tonight is very likely going to drive the direction for the dollar, of course, later today. All right, so now that we've covered the euro, we'll take a look at Germany 40. Germany 40 is an instrument that tracks the DAX futures, right? And of course, yeah, we'll be going through the indices and we'll look at oil as well. But of course, if there's any other instruments that you would like me to cover, please drop them in the chat box, right? I'll be more than happy to go through the analysis with you. All right, now looking at Germany 40. So we can see here after the bloodbath on at the end of or rather on 1st August till the 5th of August, right? Global equity markets all stabilized in the first week of August before reversing to climb very strongly. Right, so DAX continues to climb today and is trying to break out of pullback resistance. I see a nice pullback resistance level here at 8. At this pullback level here at 18,792. Pretty close to the all-time high, right? This pullback resistance level here is quite close to the all-time high, which occurred on 16th of May. Right, so very clearly, we can see where the major resistance levels lie, and we have a potential bullish breakout for the DAX as well. For Germany 40, we have a potential bullish breakout opportunity here. Now, in terms of support, right, there's a pretty decent pullback support level here that was in place at 18,171. We can see the DAX finding support of this level on 2nd of July till the 25th of July. So for about a period of 3 weeks, 3 to 4 weeks, it found pretty decent support level here, which now could be once again functioning as the first major support. In terms of the second support, I would say there's a nice swing low here that occurred on 14th of June at 17,977. So we can use that as the second support here. Right. And we can also run a Fibonacci retracement starting from this high here on the 12th of July, going down to this low on the 5th of August. Let's pull up all the fibs. I think most of the retracement levels should have been broken. Yep, we can see that the DAX has smashed through all the retracement levels, including 61 and 78.6% as well. So right, we don't need to use these levels for now, or this retracement for now. And quickly looking at uh, the stochastic and RSI, right? Stochastic oscillator seems to indicate overbought condition. RSI, not really just yet, right? It's only about RSI is only about what is this 60? Yeah, it's only about 60, but it's also seems to be at a level where it has topped out previously as well. Right, so previously we can see here on 12th of July, right? On 12th of July, we did get a uh overbought condition highlighted by the stochastic oscillator, but not by the RSI, because RSI only hit 61, stochastic oscillator hit 82, but we did see Germany 40 stall at around 18,730, reverse for the next 3 to 4 days, and sort of consolidate at around 18,300. So it does seem like we're approaching a similar setup as we speak today, right? So maybe we may not have a potential bearish breakout, bullish breakout, but perhaps we could see prices stall at around the first resistance. Remember, this was where the RSI hit last time as well. And we see stochastic oscillator climbing above 90 as well. So maybe a little bit of caution on this current up move for the DAX, right? The current up move for DAX. Maybe I see a little bit more headwinds than I see tailwinds for this instrument here. Right, now then let's move on over to US 500. Right, so US 500 has made a very nice V-shaped recovery here. And of course, it's approaching its all-time high. So the intraday all-time high here was set at about 5,669. So very clearly, this is where the first resistance sits at. And in such a scenario, how can we identify uh, the second resistance? Remember, this is the intraday all-time high. It's on 16th of July. So similarly to gold, we're going to use a combination of Fibonacci projections and extensions. So let's start with the extension first. We're going to start it from here. This high on 16th of July going down to this low on the 5th of August. Remember, key extension levels sit at 127 and 161%. Now, we can also use a Fibonacci projection here. So this projection is going to start from this low on the 19th of April, going up here to the 16th of July and ending at 0.3 on 5th of August. So key projection levels are at 61, 78.6%, and 100%. But we can see all these projection levels have already been surpassed, except, oh, sorry, only the 61.8% projection level has been cleared, but we see 78.6% aligned pretty well with the all-time high, while we see the 100% projection level aligned very well with the Fibonacci extension at 137%. So that's how we've identified the second resistance for US 500. And of course, should we see price, or should we see this instrument continue to climb higher, then of course we can use the 161% extension level as the next resistance barrier. All right. Okay. Hi, Trevor. Okay. For Fibonacci, right? Okay. For Fibonacci, I just recommend for Fibonacci analysis, it's recommended that we do the analysis on the H1 timeframes and above. But I personally prefer to do it on the H4 or the daily time frame, right? So at the very minimum, you should be using the 1 hour time frame for Fibonacci analysis. Otherwise, for me personally, I like to use it on the H4 and daily time frame and above. Right, yeah, yes, Trevor. Yes, I understand that usually I do it on the H4, but we've seen such overextended moves in markets, right? We've seen such overextended moves in the currencies and US 500s. It's for at the present moment, it's better to do the analysis on the daily time frame to identify the really rate the major levels as well, right? If you've seen over the last 2 weeks, we've seen really overextended moves in the dollar, overextended moves in crude prices, as well as gold, and of course in the equity bounce as well. So currently, I feel the best analysis, best time frame to do the analysis now is on the uh, daily time frame. Mhm. Question. All right. Okay. So basically, why am I doing the analysis on the daily time frame? Now is because of, like I said, if you look at it, For example, if you look at dollar index on the 4-hour time frame, right? Yes, you can still do the analysis, but it's quite hard to identify where the major support and resistance levels are, right? But if you do it on a daily time frame, we can see very clearly where the major support and resistance levels are. So hence, based on current market conditions and the overextended moves of various asset classes, right? I'm doing the analysis on the daily time frame because it's simply more relevant to the current context. Right, most welcome, Trevor. All right, so coming back to US 500. Okay, so we can see based on Fibonacci projection, 61 has been cleared, 78.6 matches first resistance, and we have a Fibonacci confluence where we have 127% extension and 100% projection aligned very well to identify the second resistance. Right, okay, just give me a second. All right, Shepard. Okay, right, okay, basically let's go back to the slides, okay. Right. So if okay, just to quickly explain this to you once again. So if we do get for unemployment claims, if you do get a result that's going to be lower than the forecast of 232,000, this is typically going to function as a bullish catalyst for the US dollar, right? So that means if this is bullish for the dollar, we can expect currency pairs like the euro, pound, Aussie, and Kiwi, along with gold to fall. And at the same time, later on, remember, unemployment claims are released at 12:30 p.m. GMT. Composite PMI is going to be released at 1:45 p.m. GMT. If we do see a strong set of PMI data or PMI result, this is bullish for the dollar because it signals stronger economic activity in the US. So remember, lower claims and higher PMI is typically going to function as a stronger or is going to function as a potential bullish catalyst for the dollar. So if that happens, then we can expect, of course, dollar index to bounce higher to or to retrace higher. And of course, we can expect euro to pull back much more deeper, perhaps towards the first support. Right, hi Trevor. Yes, I think we're going to schedule it in now for we're already in August, so I think the schedule okay, it will be out in 1st of September, right? Okay. I just remember this is going to be out in the first, we are already in third week of August. We can do one in September as well. All right. Sorry about that. And this will be done on Wednesday, I believe. Yeah, this educational topic will be done on Wednesday. Right, so where were we? All right, US 500. All right, so these are the major resistance levels. What about support? Right, there's a pretty nice gap here that occurred on 24th of July. Right, so this level here at 5,533 previously functioned as a resistance here. There's a pretty decent pullback resistance level here, which now can potentially be a support. So this is how we've identified the first support for US 500. And the second support is at this pullback level here that we see at 5,402. This is level function as a nice pullback support from 25th of July till the 1st of August. So this is how we can identify the second support. Now looking at stochastic and RSI. Okay, stochastic oscillator does seem to be indicating overbought conditions, but not yet with RSI. So perhaps this upward trend for US 500 still has some little bit of runway. Right, the last time we saw like an overextended move here in the RSI and stochastic was on 10th of July. But even then, right, we saw a RSI hitting 82, stochastic hitting about 96. But we did see US 500 actually climb higher for another 4 days, right, before finally running out of steam or stalling at around 5,665 before reversing the drop lower. So even though we are seeing an overbought condition as indicated by the stochastic oscillator, however, RSI is nowhere near to indicating an overbought condition. So I would still be in favor of US equity markets climbing a little bit higher, maybe not as as rapidly as they did in mid-August, right? Maybe not as rapidly as they did in mid-August, but I think it's going to be a much more slower grind, making its way up to the all-time high that was formed on 16th of July. Right, okay. Uh, all right, okay, we can do DXY again. Sure, Trevor, no, that's fine. I'm more than happy to do DXY once more because that all relates to all the other major currency pairs and of course to gold prices as well, right? But before I do that, just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar. Let me just quickly launch a poll. Oh, here we go. Right. Okay, for RSI and stochastic, I wouldn't say which one follows the other, right? It's what we are looking for is more for them to both of them highlight the overbought condition and oversold condition simultaneously, right? It's not so much about which one is leading the other, but it's more about both of them lining up at the same time to give us a simultaneous signal for potential overbought condition or a potential oversold condition. All right. All right. That's great to see. Good to see the feedback come in. Thank you so much. Truly appreciate all the feedback. Thanks to you, everyone. All right. So let's move back now. So an example of them lining up together nicely, probably I think is something that we see on the euro as well. Okay, so just talking about uh the RSI and stochastic, right? We can see here on 7th of March, RSI coming to about 67, stochastic also coming to about 91. And we did see the euro USD stall at around 1.0964. Similarly, as quite a similar setup here on 15 and 16 of May. Stochastic coming up to about 66, RSI coming up to about 66, stochastic coming up to about 95, and we saw the euro stall again at around 1.0890 and reverse as well. And of course, the most recent one was on 17th of July. Once again, we see the euro stall at about 1.0930 and reverse quite sharply. So this is something that we're currently seeing now as well. We see both of these two momentum indicators line up. Both of them are highlighting a potential overbought condition, which seems to suggest that we may see this current pullback in the euro extend even further. Right, so let's come back to the dollar index. Right, so for the dollar index here, right, we can see it's pulling back very sharply, or it has pulled back very sharply since mid-August, but it seems to have stabilized today at around 101.10, right? So, and at the same time, we are also seeing oversold condition being highlighted by the RSI and the stochastic oscillator, right? So we can see RSI dropping as low as 25, stochastic dropping as low as 4, right? Is something similar to what we saw on 5th and 6th of August, also similar to what we saw on 17th of July as well. So when you see both of these two indicators highlight are dropping to extreme lows, right? They're dropping to extreme lows. They do seem to, and when they tally together, they suggest a very they give us a very high probability that this is a strong oversold condition here, and we should expect the dollar index to stabilize and make a retracement to the upside. So this is something that we saw clearly on 17th of July and also on 5th and 6th of August as well. And once again, we are seeing a very similar setup. So to me, this does seem to suggest we are likely to see the dollar index retrace higher. But of course, it also has to be fundamentally driven as well. So that's why I said pay attention to the unemployment claims and the US composite PMI data that's going to be released later today. Right. So yeah. So first major support for dollar index is this swing low that took place here on at the end of December. That's at around 100.83. And the second next major support for the dollar index is another swing low that occurred in mid-July of 2023. Right. So once again, if you just look for the oversold conditions based on the daily time frame, you just look for the oversold conditions. Another one that was nice, quite nice, was on 8th of March. Right, 8th of March, we see here dollar index stabilizing at around 102.75 for about 3 to 4 days before reversing to climb higher. Similarly, we see another nice setup here on 27th of December 2023, dollar index stabilizing at around 100.80 before reversing once more. And another one here on 29th of November. We see dollar index stabilizing at around 102.60, making a little retracement to the upside before resuming the downtrend. And of course, the last one here, final one, on mid-July, 13th July, we see dollar index stabilizing at around 99.75 before making this very strong bullish move to the upside. So you can see here, whenever these two indicators line up, right, and they tally and they line up, simultaneously indicating an oversold condition, or perhaps even indicating an overbought condition, it really does seem to pinpoint the respective reversal, whether it's a bullish reversal or a bearish reversal. So currently we're seeing a pretty high potential for a bullish reversal for the dollar index, and that could be driven by the data that's coming up later today. Right, okay, so and of course resistance, this first resistance for uh the dollar index, first major resistance is at 102.15, is a nice overlap, is a nice pullback resistance level. And at the same time, if we do see the dollar index climb higher, right, if we do see the dollar index climb higher, right, then I would identify the first take profit zone for any long dollar index positions between the 23 and 38.2% Fibonacci retracement levels. And of course, if it continues to climb higher, then we can definitely target the first resistance at 102.15 as the next take profit level. Right. Okay. So these are the key levels for the dollar index here. Right. Is there anything else? Right. Oh yes. Let's look at crude oil. We've not covered oil, so let's do that as well. Right. So we'll wrap up the session by looking at crude oil. So similarly here, even oil has been in a very extended downward move, right? Since mid-August, crude oil prices, WTI oil stalled around $80 per barrel and it has reversed very sharply. But however, it is approaching a pretty significant multi-swing low support level here, right? You see it is actually broken below. If you look at it on a daily time frame, it's actually broken below this multi-swing low support. There's a strong multi-swing low taking place here on 4th of June and another one here on 6th of August. As of now, it looks like it has broken underneath this swing low support. But for now, let's see how it goes. Right. Similarly here, okay. Hi, Cleon. If there's time, I'll try and cover Bitcoin. Right. That's what. Yeah. If you have any requests, yeah, please do send them in early. Right. Yeah. That's what I reminded everyone. At the beginning of the session as well. Right. Do not leave your request till the end. Right. Get them out early so that we actually have time to go through the analysis. I'll try and see if I can do Bitcoin, but for now we'll just try and wrap up with crude oil. All right. Okay. So for crude oil, okay, it's sort of testing this multi-swing low level here, multi-swing low support level here at $73. And the next major support beneath that is this pullback level here at $71.91. This level also has the presence of a 78.6% Fibonacci retracement. We started this retracement from here, this low, 13th of December 2023. Ending with this high on 5th April 2024, we can see that the 78.6% retracement aligns very well with the pullback support here. So this is going to be a pretty strong support zone for crude oil over here. And the second major support is this other pullback at $70.53. Now, in terms of resistance, right, we can see previously this level here that WTI oil found support at around $75.86 on 30th of July and made a very nice strong bounce on the 31st. But this level gave way once again. So what was previously a pullback support level here could now potentially be resistance. Remember, there's no other clear major resistance that we can identify apart from this pullback here. And we can probably use a Fibonacci retracement as well to help us. So we can see here we have a 23%, 38% close to the first resistance. So we can use the combination of the 23 and 38% as well. Right, so because there's no other major resistance levels that we can identify, we can use a Fibonacci retracement as well at 23.6% to help us identify the first potential resistance. And finally, the major resistance is going to come in at this pullback level here at $75.86, which also has the presence of a 38.2% Fibonacci retracement. Right, for now, crude prices seem to be stabilizing at this strong support zone. We may see a pretty decent retracement to the upside as well, right? In terms of RSI and stochastic, right? Not really indicating anything clearly oversold just yet. But if I were to look at it, right, the last major signal came in here on 4th of June. We see RSI dropping as low as 29, sorry, 29. Stochastic dropping as low as 8. But however, now it's not dropping to extreme levels as we've seen. But perhaps because this is going to be a strong multi-swing low support, we're quite likely to see crude prices stabilize around this zone and maybe make a little retracement to the upside. Okay, we've got a bit of time, so let's quickly wrap up with Bitcoin. Right, actually, we look at Bitcoin here since mid-August. It's sort of like ranging between these two levels, right? It's sort of ranging between 57,500 and around 61,700, right? We see it ranging between these two levels, a bit of sideways trading action. So quite clearly, we can see this is like the first resistance for Bitcoin here. And first major support is at 57,000. Now we can also run a Fibonacci retracement from this low here on 5th of August going up to the high on the 8th. We can see that the 38.2% retracement level aligns very well with the first support. And we also see the 61% quite close to this level here as well. So we can keep 38 and 61. And second support for Bitcoin is going to be at around 53,550. Okay, so looking at, so this is the first major barrier here for Bitcoin here, right? It has been stalling at this level since 8th of August, so nearly almost 3 weeks now. It has been stalling around this level here. So once again, take note, maybe it's just ranging. I think it's quite likely maybe for the rest of this week as well, at least till tomorrow, Bitcoin is going to be just continue to range between 57,500 and 61,700. Now we can also run a Fibonacci retracement from this high on the 29th of July going down to the low on 5th of August. We can see that this first resistance actually aligns very well with the 61.8% Fibonacci retracement, which is probably why it's taken some time for it to try and break out of this level here, right? It's a pretty significant resistance barrier that's also has a 61.8% Fibonacci retracement. And of course, the next major barrier for Bitcoin is should we see it break above 62,000, right? It's going to be at around 68,158. Okay. Okay, so these are the key levels for Bitcoin. If you look for Bitcoin, because it's not really overextended, if you look at Bitcoin on the 4-hour time frame, you can see the sideways range trading a little bit more clearer, and you actually see it as a nice overlap support here, the first support, and you can see this here very clearly as well. Right, so you can see it's been ranging between 56,900 and 61,700 since 8th of August, right? It's a nice sideways trading, so you can play the range. So when you see an instrument trading like this, right, as it approaches the resistance, maybe there's a good potential opportunity to short, Bitcoin here, and it approaches this first support. This is where your take profit zone should be. And conversely, when it hits the support, this is where you can get a potential bullish reversal here and try and target close to first resistance as a potential take profit zone. For now, we're seeing very clear sideways action for Bitcoin. There's no real direction for this coin here. So yeah, I think this is quite likely going to continue for the next couple of days at the very least. All right, hi Trevor. All right, what does it take to be part of the team? All right, okay, for this, I'll have to direct you directly to IronFX themselves, right? Head on over to customer service, right? And I'm sure they'll be able to help you out or put you in touch with the with the relevant person or the relevant team. All right, okay, so that's all I've got for today. All right, so once again, thanks everyone for tuning in. Hope this has been a great session, and yeah, do look out for. I don't have a great trading week, and of course, most importantly, enjoy the weekend as well. We've got a weekend coming up. Good time to recharge and enjoy ourselves and spend some time with family and friends as well. All right, take care, everyone. Take care. Have a great trading week, and see you all at the next webinar.